Hey there, it's Tom Miller with eXp Realty, and this is my recap of the 2023 real estate market and my predictions for the 2024 real estate market. So let's hop into my presentation. So here's what the news is saying about 2023. Not a lot of good things. Let's talk about what actually happened in 2023. So interest rates peaked near 8% back in November. That really affected our overall sales. And I'll show you some charts in a minute here. The rates really went up over 2023, and that decreased our overall sales by a total of 16% compared to 2022. But the bright spot is our home values continue to increase by approximately 4%. What caused that? Well, really, that's a reflection of our continued low inventory situation. Let's take a look at some perspective on our 2023 sales year. We had just over 13,000 sales, 4.1 billion in total sales volume in our marketplace in 2023. So what's interesting about that is you have to go back to 2015 as far as the total units sold to get a similar number. But look at that, only 2.55 billion in value sold in the market that year. So that shows some significant valuation increase in our marketplace over the last, since 2015, basically. And, I think we've all seen that. And we've all felt that. If you bought a home in the past couple of years, you know it. And man, if you've been sitting on your house for a few years, your equity has grown significantly. Pretty amazing. And again, we had a record year in 2021 during COVID. As you know, the market was just bonkers. 2022 sales were down quite a bit, but still an amazing year based on past history. I mean, just as recent as 2019, we barely were over 14,000 sales. So really, compared to the pre-COVID time, 2023, it wasn't a great year, but it really wasn't that bad of a year. And again, you look at that amount of value increase, and it's pretty significant. A little more perspective on interest rates. Wow, look at that. Going back to 1982, mortgage rates were over 18%. It's insane. Can you imagine that? And I've talked to people that bought their first home, back in that time, and it was just crazy. We hit the bottom of interest rates in 2022. And really, if you look at that trend line coming from the early 80s all the way to 2022, has just been a pretty constant downward push in interest rates. And, 2008 or 9 is really where we saw the first time rates start to come down in that below 6% range. And they've, now it's kind of crazy to think about it, but it's been over a decade since 2008 and 2009 happened. And so the market expectations have been in a place where, lower rates have been kind of the thing. But again, to provide some perspective, we're in the 6.5 range right now for interest rates. As you kind of draw that line back, really not looking too bad for the long-term history. So I think, nobody likes that perspective, but it kind of is what it is. And I'm just going to continue to say, you're going to hear me say interest rates are what they are. So what's going to happen? Notice my crystal ball I put in here. Nobody knows. It's just the reality of it. The other reality is interest rates are going to dictate what's going on a lot. And this is just a picture of the last couple of years of the rate increases that we've seen from the bottom of the market in 2021 or 22 with the ultra low mortgage interest rates and at 3.22% there in January of 22. I mean, we're probably never going to see those rates again in our life. And I've told several people this: if we see rates like that again in our life, it means something really bad has happened. And you don't want to see interest rates that low again, because it's just going to continue to push house prices way up. And it's just not healthy for the real estate market. That's what I call government intervention right there. And, usually when the government intervenes in the marketplace, not great things happen. You just see all the red lines here are the Federal Open Market Committee raising the Fed funds rate, the rate that banks pay for overnight money. You can see how mortgage interest rates are not directly correlated to that, but you can see how the entire interest rate market does that. That kind of sets the tone for that. And you maybe have heard the term of flattening the yield curve or inverting the yield curve. And I think this shows a great picture of that. You see the spread between the Fed funds rate and the 30-year mortgage rate back here in 2022 is quite large. And here you can see the spread is a lot less. And so we have a very flat yield curve right now. And that's also probably not a great thing. So I do think you'll see at some point the Fed funds rate come down a little bit. It'll be interesting to see when and how that affects mortgage interest rates. So what's really affecting interest rates right now? Well, here's just some snippets of different things I've seen. We've got what's going on in the Middle East right now. Is there going to be a war? Is there not going to be a war? That has an impact on interest rates. We've got a big presidential election coming up this year. That's going to have an increase or impact on rates. We've got all the economic prognosticators out here talking about what's going to happen, and kind of got a mixed bag of what people are talking about. I mean, you got people predicting March, May, and June, we're going to see maybe the Fed funds rate come down a little bit. You've got other people saying, hey, hold on, not so fast. Maybe rates aren't going to go down that quickly. And, I think the thing to really take away from this is you hear a lot of people in my industry right now just really trying to promote that rates are going to come down this year. And I think there's a chance they will, but I think, are we going to see rates in the fives in 2024? I don't know. And I'm not going to try to predict that because I don't think that's the right thing to do right now. I want you to have the best information. And I don't see a strong argument with some things going. We're going to talk about the recent Fed meeting this week here and what they said. And I'll tell you why I don't know that that's necessarily going to be the case. So what did the Fed say this week? So Jerome Powell had a press conference after their 2-day meeting. And, I think the biggest issue that they're looking at right now when it comes to interest rates is the jobs market. And yesterday we just had another jobs report come out, and it was very strong. And so the Fed is very focused on getting unemployment up to 2%. And I know that sounds weird, and we want everybody to have a job, but the Fed looks at that 2% unemployment as being kind of the optimum number for our economy. Same thing with inflation. They want to see inflation at 2%. So they want unemployment at 2%. They want inflation at 2%. And neither of those are where they need to be right now. And so, I think you're going to see them continue to consternate over this job situation. And until that number comes up to 2% unemployment, I think you're going to see it's going to be hard for them to want to make any changes in the interest rates. I don't see them raising rates, but I do see them maybe pushing the pause button and just kind of waiting to see. Again, inflation is not necessarily sustainably down at the 2% range. And both those things are really important for them. When it comes to housing, they understand that, with the raise in rates they've had, they have broken the demand in the housing market to some extent. And again, we talked about that in the charts there where we saw sales go down this last year, although dollar volume is up. Actual number of sales is down quite a bit. So there are fewer people buying and selling homes. We're going to talk about some of that here in just a minute. And the Fed, their only tool they have is interest rates. They don't have any way to really affect affordability of housing because the true affordability of housing right now is really due to supply. Across the board, across the country, we've still got low supply of housing, and particularly of affordable housing. And so that is what's continuing to push home values up. And the combination of home values going up and higher interest rates is making affordability tough. Let's just look at the inventory situation in central Iowa here. So this goes back to 2009. And you can see back in 2009, 10, 11, at the peak of the market every year of inventory, we had close to 6,000 homes listed on the market. Well, we haven't seen that in a long time. In fact, we've struggled to get above 4,000 homes on the market even prior to COVID. And then COVID hit and boom, 2021, these numbers were just incredible. I mean, I don't know that anybody that's working in real estate today has seen inventory as low as the bottom of 2021 when we only had 1,643 active homes on the market. That's just an insane number. And 1,630 again in 2022. Those were the market bottomed out inventory wise. Those 2 years were just incredible. And that's why you see the massive amount of appreciation that we've had in these homes, because there were more buyers that wanted in the market than there were sellers. And what happens when, demand outpaces supply, it pushes prices up. And so what we're really continuing to look at here is truly a supply problem. We ended 2023. Right now, actually sitting here today, we're right around 2,800 active homes on the market. And so it's going to be very interesting to see this spring. Are we going to be able to build inventory up, and are we going to get available housing inventory in central Iowa up to around that 4,000 home? I think that's a target that we want to see, is we want to get active listings at some point this year up around that 4,000 mark. That's going to start to help moderate home prices a little bit, but it's still, if you look back, I mean, that's still not a very high number. So I think, again, interest rates are going to be the huge driver. And I think this is just a really interesting chart here that shows what you can get for a $1,200 monthly payment, just principal and interest payment on a 30-year mortgage. Back when rates were at their lowest, you could buy a $200,000 house, basically. When rates hit their highest, it eroded buying power. Look at that. It eroded buying power down to, for the same monthly payment, you could only get a home that was $166,000. Well, there are some homes in our market that are $200,000. There's hardly any homes in our market that are $165,000, $166,000. So that's a tough number. Now, as you see, with rates coming back down a little bit, that affordability has come back up to the mid to high 180s. And that's still a tough number. And so you can see how much interest rates affect affordability. And then again, we've got this lower inventory situation, not as bad as it was, but it's still there, continuing to push home prices up. And so affordability is really going to continue to be a bit of an issue. So what's going to happen in 2024? I'm going to go back to interest rates. I don't know, guys. I think, I'm looking at where we're at. I think if we can get into the low sixes, I think that's going to be healthy for the market. I don't know if we're going to see the fives this year or not. If we do see the fives, I think you're going to see this market just go absolutely bonkers again. There's tons of people sitting on the sidelines. They've got it stuck in their head that they're not going to do anything until interest rates get down in the fives. And as soon as that happens, they're going to jump in. A ton of inventory is going to get snapped up and prices are going to get pushed even higher. And I think that's why I'm actually not necessarily rooting for interest rates to go down as low. I mean, I know everybody in my industry wants more sales, but the reality of it is I don't know that it's really a good thing for this market to get interest rates down that low. I think you're going to see overall sales. I think we're going to do a little better than we did last year. That the last half of the year last year, with rates really getting up above 7 and up to 8, really played havoc with the market. I think that's calmed down. I think we're going to see a calmer interest rate market this year. And I think we're going to see overall sales be a little better than last year, but it's not going to be what we saw in, 2021 and 22. I think we're going to continue to see, regardless of interest rates, we're going to see home values continue to increase. And I think we're going to continue to see a struggle to get inventory on the market. Because again, if we've got all these buyers sitting on the sidelines waiting for rates to go down into the fives, they're not putting the home they own on the market right now. And so we're not going to see that. And also, builders aren't really incented right now to put a lot of inventory out there because they're nervous about the interest rates and their costs have gone up. Their material costs are still high. Their cost to borrow money has gone up. I mean, so it's just not as attractive for builders to be super aggressive right now either. So I think there's definitely some question marks for 2024 here. So what's this mean for you as a homeowner? Well, and for your equity position in your home. Your home value is going to continue to increase this year. There's no doubt about it. It may not be what we've seen the past several years, but I think in the 3 to 5% range, if rates stay pretty flat. If rates go up, it could be even higher than that. We'll see. Or if rates go down, I'm sorry, it'll go up. I think I think we're gonna see the pace of value growth flatten out a little bit, or just, be at a much more sustainable pace. And I think, really what it's going to come down to for your particular situation is location, condition, and price range is going to have a big impact on how much your value increases. I think we're going to see the upper end of the market probably. I don't know what's going to happen at the upper end of the market. I don't see prices going up as much at the upper end of the market, but man, below 400,000 and below, it's getting tough to build homes in that, below 300. And I think we're going to see inventory remain very tight below 400,000. And that's just going to continue. That's where most of the activity in the market is. And we're going to continue to see that just continue to push prices higher because that low inventory in that situation. So for buyers, what's that mean? Well, you know what? Interest rates are what they are. And if you want to buy a home, my suggestion is, if it makes sense for you financially, you should buy it. Because again, I don't see rates coming down as fast as a lot of people are predicting. And so with rates moderating where they're at, or coming down just slightly, but home prices continue to increase, if you wait for that 5% interest rate, you're going to be paying a lot more for a home, and the affordability is actually not going to be there for you. You're kind of waiting for something that's not actually going to happen. Again, under 500,000 is going to be competitive this spring. I mean, there's just not that much available when it really comes down to it. And it's tough for new construction to get down that. There's some new construction, down into the threes, the high threes, maybe some down to around 3, but it's going to be really tough for new construction to fill that gap. And so, buyers, if you're thinking about buying, actually right now is the time to get the best price in 2024 before rates go down and before the when that spring market fires up and everybody jumps in, prices are going up. So now is actually the very best time to do it. I know this may not be the message a lot of people wanted to hear, but the reality of it is I want to make sure you get the best information. I don't want to have rose-colored glasses on and selling you a picture of that's not going to be a reality for this year. Man, do I hope rates come down for everybody to a certain extent, but I really think we're going to see things moderate this year. If you're interested in what your situation looks like, if you're wondering what your home equity situation looks like, how much your home has increased in value since you bought it, I'm happy to have a conversation with you about that. It's real easy for me to put some information together for you, just kind of give you a picture of that. I know a lot of people like to put a balance sheet together every year and kind of look at where they're at. I'm happy, the online valuation models they just are all over the board, and they're not that accurate. They're sometimes in some neighborhoods, they're really close. And in other neighborhoods, they're off like 10% in either high or low. It just kind of depends on what it is. So I'm happy to help you out with some valuation information. If you're thinking about buying a home this year, be happy to sit or get on Zoom with you, get together with you and talk about a strategy, your situation as far as finances, what that looks like, when might be the right time for you. Do you have a lease? Do you have something to sell? What's that look like, and what makes sense for you? So again, this is my wrap up on my 2023 end of year wrap up recap, and then my 2024 predictions. I'll be putting out some more market information throughout the year, and look forward to sharing that with you. So have a great day.